How are you now? My name is James Whelan. I'm the Managing Director of the Wealth Management Division of Barclay Pierce Capital. You are listening to the Theory of Thing Investment Podcast, Episode 2, Season 9, I believe we're up to. I am joined by Heath Moss of HLM Investments. Heath, how are you now?
Very well, thanks, James. Good morning. Quiet week this week on markets, but absolute massive week coming up next week in markets and for Australia with the T-Swizzle coming down under.
Oh, yes, that's right.
And the Super Bowl as well. Forgot about Super Bowl.
Don't get one thing at a time, mate. It's you know what? Actually, we're going to be talking about the Super Bowl later. We're going to be talking about some inflation stuff, whatever Heath wants to talk about as well. We're going to be talking about the new press conference mode for the RBA, which I thought was fascinating as well. The way that it was going,
very interesting.
There was some chat. I can't tell you what the chat was saying, but the chat was it was diverse. We're going to be talking about some people that probably should be kept away from a Bloomberg terminal. But anyway, so we'll get into that later. I think that's all that we're going to really talk about as quickly as we possibly can. We're going to be talking. Also, it's just popped into my head. We're going to be talking about CPI revisions, which is next week going to be the situation that people are going to go into and sort of the way that the US is going to be looking at that. Anyway, don't forget that anything you hear in this podcast is the advice is general in nature. Please seek a consultant from McKinsey if you have any problems with that. Actually, don't. Just talk to me on that one. We're doing well, mate. I'm all pumped. First and foremost, I am all pumped. I'm pumped for Super Bowl. You know me. I get as heavy as the not that it's, I don't want to be the guy. The heavy lies the crown of running a wealth management firm. No, it's I don't want. I'm not that guy. So trust me, I'm very modest with these things. But it is a big job that I'm doing. However, that being said, I've made sure that Super Bowl still has a priority in my life. But everything has to be work related. I've made sure I'm going to the events that are being done where the networking is that has to be done. So there's a couple of good ones that are going on. I'll do a first half and a second half sort of split. And I have specified, yes, I'll be there, and I want to make sure that I hear about the product or the people or the whatever it is that you're doing. But you have to note that when the football is on, I will just be watching the football. Don't. As much as I'm interested in meeting your new BDM about whatever it is that's there, you need to. You just
let you have your fun
so that I can watch the TV. It's going to be an absolute barn burner of a game, mate. But we'll get to that in a sec. So I'm a few weeks away from my trip over to the States to go and do the NRL thing. That's getting even more fun. And the situation that is behind that. We're all, like I said, we've got the Lakers Clippers game on the time before that as well. A few really good key people to meet over there too. That's sort of the bulk of where that's going for me, aside from the usual fun stuff of building this business and getting this thing back to its full glory. New advisors coming through the door, which is great. Bit of hush-hush on those sorts of things, but people very interested to come and work here with this new feeling that I've got. What about you, mate? What's going on over on your side?
Not much, not too much. It's just getting back to the regular groove of things with the kids back at work. Oh, no, not at work, sorry. We're not working them.
Kids back at work.
At school, yeah. No, back at school. We've already had one home with sick. He had caught a cough and whatever, so that's great. I mean, oh God, but it happens, and then it just rips through the family, and it just sucks. But oh well. So he's been home, but yeah, not too much, but laying low at the moment. Just getting a little bit nervous for Super Bowl on Monday morning our time with the 49ers, obviously playing my 49ers. Outside of that, it's less than a month. It's less than a month until the AFL season kicks off as well. We've got less than a month.
It's all so quick, isn't it?
It just happens when it comes after Christmas and you hit January, and it just rolls around so quickly, and before you know it, you're in halfway through the year. So, but markets were very quiet this week though. On the back
go for it, mate. Fire up. I need you to touch on RBA. I need you to touch on 5,000. I need you to touch on Magnificent Seven. Go.
Beautiful. All right. If you want to bring the charts up, you press the button.
That guy. Sorry. I'll do the chart every day, every freaking day. I get from this guy with the charts.
So as you just touched upon there, the SPX touched 5,000 last night, 5,040 but paired back from that down at 4,997. It just continues to grind up. It's been another good week for the SPX, up 0.8%. Same with the NASDAQ. The NASDAQ is up 0.8% as well. And the XJO, it's actually down 0.8%. We actually, on last Friday, we closed on our all-time high. So I think that's where we've come from. But basically in the US, it's a couple of things. Earnings, the bulk of earnings have come through. We're sitting at around, let me check my stats here. We've got revenue growth of 3.5%. So that's about the 13th straight quarter with revenue growth and earnings growth of only 1.6%. Now, if you remember towards the start of last year, I think fourth quarter earnings estimates were for around 8% earnings growth. So that paired right back throughout the year. And we've seen some modest earnings growth. And obviously most of that is powered by the Magnificent Seven, who have all been fantastic. We're still waiting on NVIDIA. We had Disney come out this week with a better earnings, slightly worse off revenue, but a lot of cost cutting, which has helped and going to continue to do that. They're also investing $1.5 billion into Epic, who make Fortnite, and going to do a collab there with Disney characters in Fortnite, I think. So that's probably a smart move. And then we had ARM come out this morning with some earnings, which were really, really bullish. And their stock was up 20%. In after hours. So that theme, that semiconductor, that AI theme is still running really, really strong. And we've had NVIDIA. Let me just bring up the NVIDIA chart.
I want to see ARM as well when you're done here, mate.
Yep. I'll just bring up NVIDIA quickly. NVIDIA, you can see, look at that. You look at that thing. It's touched almost at 700. It's up 40% for the year already. And we're, 6 weeks in. And let me see if I can bring the ARM. There we go. Look at that. We're on fire. Look at that. Look at that gap up there. Massive gap up.
That's just on AI. That's on AI growth. And,
just all on AI. AMD is probably the only one that's been maybe a little bit disappointing there. And it probably reflects their position in the market, being the second player and only having about 10% of the market. So that's earnings looking really good. Earnings have probably been slightly better than expected in the US, especially in the tech sector. Earnings for 2024 still expected around 11 to 12% earnings growth, which I think is too punchy. But we are again seeing earnings revisions down by analysts. I think in January we saw earnings revisions down by 1.4%. So they are coming down. Generally, remember, analysts are more bullish when you look at the longer term outlook and more bearish when it comes to shorter term outlooks. And that's probably why earnings tend to beat more than often when it comes to the short term outlook. In terms of rates, and we'll talk about Fed and all that, it's with most central banks, including the RBA and the EU, etc. It's a wait and see. They want more information. They want to see more data. They're pushing back on the possibility of March rate cuts still. And that's basically the story. The 10-year is hovering around that 4.1 to 4.2. If it was to break above the 4.2 there, you can see that. That's probably going to be a decent breakout and go a lot higher. We do have US CPI next week, and we've got CPI revisions tonight, I think.
That's why everyone's talking about it today. The revisions, so it could potentially change a lot of things. Just on, I mean, a lot of analysts are going to be changing that numbers by decimal places in their spreadsheets, and then coming out with some extrapolation saying, this actually shows that we're on path for 2.8% inflation by May. Therefore, this sort of stuff where it just changes stuff. A small, the butterfly flapping its wings in Costa Rica or whatever it's called.
People are a little bit concerned because last January they got revised up quite heavily, the CPI figures, and obviously, people are worried that's going to happen again. But core PCE inflation data, which is what the Fed really looks at, is running at 1.86% annualized. So it is below their 2% target and well below it. So I think it would take something massive for that to change, and we could see yields come off a little bit if it misses or comes in well below. So, but obviously the opposite is true if it goes the other way. So what else? The RBA. We can talk about the RBA a little bit. Get my screen back up. The RBA met this week, obviously held, which was no surprise. Commentary was still, slightly hawkish with comments that, such as, if we need to increase rates again, we will. Sort of that sort of verbiage is out of the Fed speak. The Fed aren't talking about raising rates anymore. It's purely about
there is zero pricing in that.
Yeah. Whereas the RBA, there's still talk of rate rises, so they're slightly hawkish still. And then they had the presser last week, or this week.
See, that was a bit funny.
It was, and I didn't see it, but I just saw the commentary coming through on Twitter, and it was not good in terms of the journalists in interviewing Bullock. They reckon Bullock
do better, people.
Handled it really, really well, but there was some really amateurish questioning, apparently, asking about Taylor Swift and all that sort of gear. That a bit of Swiftflation.
The Taylor effect does come into it. I'm just going to pull up Kitlow. I mean, I love Kit, and he's great, but he did put a tweet out this morning. I mean, just the chatter as it was going on was just so funny, and he put a thing out here that was it was. Where did he go? Here. Would you rather? Here we go. Is it worse to A, have to answer questions about Taylor Swift, or B, have to answer questions from elected representatives? Because Bullock is testifying today, right?
As we speak.
Yeah, have to answer questions from elected representatives who believe the Bank of England stole our gold and who want to build some sort of taxpayer-funded transport system to shift iron ore from WA to North Queensland factories. She's got to go through a lot. And for the first time up, I reckon she handled it okay. Bit nervy.
Yep.
The journo's probably just. What are you going to do with these people, mate? Seriously,
do better. Yeah, get more educated. And that was my whole beef when the headlines when Lowe was talking about rate rises initially, and the headline was rates won't rise till 2024. And that really irked me because it's not what
they didn't dig into it enough. There was caveats. Yeah, we knew that. We knew that. But
we knew that. But the general public didn't.
Us.
The general public didn't because of the way it was translated. And that really irked me. And I think the Australian financial sector media just really needs to up their game a little bit. I would expect. Some really good people out there that should be on the front page more than who are reporting it. So, but that's the RBA.
On that note, while you're there, we were talking the other day about Business Insider and how vital Business Insider was to a lot of us at that time, and just how detrimental it actually was to the industry and to the education and just that knowledge when Business Insider was taken away from us by the sockless wonders who decided to do that. That, Colgo and David Scott, what they managed to produce for us to actually benefit our worlds, what we managed to contribute, which also then benefit other people's worlds too. Yeah, we needed that to be in place, right? And I thought, it's probably anyway. What are you going to do?
It's important for the Australian landscape to have high quality people in those sort of positions. So
that's right. That's right. Anyway, and those two, they built. It was good what they did. Anyway, they know how I feel about that. I'm not going to go into that too deeply. It makes me upset that such a good thing was taken away from us. That was on at its peak, at its absolute peak. Business Insider was just absolutely perfect, ready to go to the next level, ready to make tons of money for whoever owned them. And no, they just decided to kill it because that's what they do. Anyway, that's how cycles work. What's next?
Quickly touch on oil. It was up 3% last night. That was basically on Israel pushing back on peace talks and peace deal, saying, no, we think we've got this thing won. So they're going ahead with that. And also the Saudis saying, basically, we're going to maintain the 12 million barrels of oil equivalent production per day. And there's no chance of increases in that as well. So that's pushed oil up, despite a healthy oil inventory add of 5.5 million barrels of oil in the US. So we're seeing oil up a little bit. So that's basically it, I think. I mean, the US dollar probably needs to be spoken about a little bit. It is rising, and it could cause problems for equities if it continues to gather momentum. It will impact earnings over in the US. It will become a headwind again. So that's worth noting. And it would also impact gold as well. If the US dollar continued to rise and rise strongly, then we'd see gold come off. I would expect the US dollar to keep on coming off as the year goes along, but nothing is linear. There's always
If I was going to say February expectations for till the end of the month, I am leaning bullish US dollar, bearish market overall.
Mm-hmm.
I would prefer to go equal weighted when I'm talking about US market overall. Slightly bearish Aussie dollar, bullish oil as well. Just going in for this month. I think that whatever has happened over the last little while, couple of days, I mean, I'm happy to keep on going with that one if I was still involved in that particular part of the game. Now on to what else was I going to talk about? Oh yeah, hydrogen. That's the other thing that I was talking about. I've been all about hydrogen. Oh no, sorry, I've got my little spiel. You get your crap.
Go for it. All right, I'll shut up.
No. Hey, what am I doing? I'm sharing a screen. Sharing a screen. Here we go. Spip show episode prep. Charge in. Okay, can you see that now? Ryan.
Yep.
Ryan Dietrich, always fantastic. The February is usually weak, especially in an election year. Seasonality has worked out beautifully well recently over the last probably couple of years since COVID has sort of resumed normality from post-COVID. Februaries are traditionally weak. If you just want to look at a month, January traditionally strong. Ours was strong. The US market was strong. February traditionally weak, especially in the US in an election year. But when the 5,000 was when the S&P 500 performance after a major milestone was hit, it's not a big sample size to go with there. After a huge milestone is hit, there's the counts. There's only 5 times when a sort of a big milestones get hit like that, and we're talking the 100, 2,000, 3,000, 4,000 numbers. The average 1 month return is 0.7%. The average 3 month return is 3.9%. The average 6 month return is 8%, and 12 months later, it's about 8.6%. I like the way that these things always just re-emphasize the fact that markets usually go up. Of anything that Ryan Dietrich puts out from Carson, and they are amazing. They're good to look at, and just because all it does is just re-emphasize for yourself. Don't try and pick and choose this thing. In 12 months' time, the S&P is always up. That's the bottom line of it. That you can see. However, so there's a major milestone on the 5,000. I'm sort of just leaning on I wouldn't be charging into the market at these particular levels. Definitely taking some money on some pieces. Annoyingly, if I was still in the game of advising on international equities and ETFs as I used to be, ARM would absolutely, all conviction, have been in my portfolios. There was not a doubt in my mind that it would have been, but that was when I was mid-transfer when they went IPO September last year. So I just wasn't able to get that placed in. All right, so skip that. The Fear and Greed Index, extreme greed. Congratulations, Heath. We are in extreme greed country. We did it, ladies and gentlemen.
Well, the SPX is at a forward EPS, forward EP of 20 times now. So we're looking at very expensive.
It does. It is. Oh, now there was a beautiful FT. Is on the FT premium side of things that talked about that actually the market isn't that. The Magnificent Seven aren't in a bubble compared to the rest of the market. If you take the Magnificent Seven out, then the numbers aren't, the PE numbers and those sort of expectations aren't really that far apart. It's like 27 to 23 times. Sort of, it's not a huge disparity. The entire market as a whole is expensive. So that was a really good article. If you can get it in the thing, then go ahead and get it in the thing.
I wouldn't say they're in the bubble either. I'd say they're slightly overpriced, but in terms of bubble, nowhere near a bubble. They've got extremely strong earnings growth to back those expensive PEs up at the moment. But it's just when those sort of those earnings growth rates pare back a bit, the PEs will have to come back as well.
Yeah. And finally, I'm all about hydrogen this week. We've got a hydrogen note going out today. It's written in my usual casual, callous, tone of just trying to talk to people like real people as opposed to talking to people like machines. Also thinking, anyway, I can go into the way that I write. And I make no apologies for the way that I write. It's real. It's from the heart. And if I didn't get to write like that, then I just wouldn't at all. So there you go. I'm going to bring in another microphone for this one. Here we go. Okay. Now we're talking about hydrogen. BMW bids farewell. This came up in the Dark Art Tribune, which I subscribe to and read voraciously, as you know. The BMW bids farewell to electric cars, set to launch hydrogen engines by 2025. Hydrogen is absolutely picking up more that I see remember the biggest issue with passenger vehicles was the fact that the infrastructure wasn't there. Everyone went down the Tesla route.
Yep.
There's charging stations, every certain number of ways. There aren't charging. I think there's only 55 charging stations in all of probably the planet. I think they're all in California, which has got the harshest emissions rules. So if you want to get a hydrogen car right now, it's not really going to happen. Hydrogen is more for commercial, more for industrial, and that's working well. But then you start to see stuff like this where BMW is switching into it. That's going well. Toyota is stepping up its manufacturing of hydrogen fuel cells as well. But there was a quote that was here from the CEO. According to BMW CEO Oliver Zips, hydrogen engines are poised to play a significant role globally in the long term. The focus on fast performance, quick refueling, and environmental sustainability aligns with the emerging priorities in the transportation sector. Pay attention to hydrogen right now. It's just got this groundswell that's sort of happening of people going, you know what? Hydrogen in passenger is now becoming more of a reality that's going to be right in front of us. And I think that's going to happen as well as people realize that, well, we're sending kids down a hole in the Democratic Republic of Congo to get cobalt, lithium, those sorts of things for Elon Musk's magic batteries. Why don't we just try this other way and just see if there's another direction that we've got here? We know that it works. We know that it works for commercial, and that's sort of where it's going. I've just got this, just everything I'm starting to see is sort of moving in this direction as well. China as well, moving in that direction too. So, which is great. So yeah, that's sort of what those are the things that I'm looking at the moment. And I'm pretty stoked about that. That's really all that I've got, mate. Football.
Beautiful. Big week next. Oh, actually, here in Australia, the earnings seasons have just sort of started kicking off. We had Nick Scali coming out with a stronger report. It was a beat on earnings. Margins were better than expected, and Jan written sales were better than expected and better than last year. AGL came out with a really strong beat and upgraded raised their guidance to the top end of their current band. And GQG, which I think we mentioned on the pod last week,
we did.
Saw $7 billion of inflows in 1 month into their funds.
We picked that quite
January. Well. And it's up significantly. I think it was around $1.85. We spoke about it. It's at $2.15 now, so it's looking really good. And they're expecting strong inflows to continue. And it was right across the board there. Emerging markets, international, US, Australian funds, they all saw really good inflows. So, that's it. And next week, the earnings for the XJ really kick off big time. We've got JB Hi-Fi, CSL, Macquarie, CBA, Telstra, Wesfarmers, ASX, Insurance Australia Group, and QBE, some of the biggest names on the index, all reporting earnings next week. So it's going to be absolutely massive for us. But I wouldn't expect any nasty surprises. It's going to be fairly bland in terms of that side of things, but a massive week in terms of earnings.
That is. My big table bang for the week has been Wellnex. You know that we did the capital raise for them to buy Pain Away. Looked at the numbers for January for their own store sales and just went, hang on a minute. If we extrapolate that out, then it means blah, 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 blah. Bottom line, the first quarter of this year, they're going to be they're profitable. That's a huge turnaround for them, which is great. So one of those great small cap turnaround stories that you got there as well. Next, WNX on the ASX. Obviously, disclaimer, we advise the company on a corporate basis, although we are arm's length from that, which you have to be. And I also do have clients holding it, and I'm an active buyer in the market for that as well. Those are all the disclaimers that you want. Have a look at the stock, do that, have a look and just go, hang on a minute. If they're going to do this, then they're going to actually make money, which means that they're on that 1.4 times price to earnings ratio, which just seems impossible. But they currently are there. I think it's the best value small cap in the market at the moment. That's me. Now,
I'll just quickly my client note will come out probably later today. I'm taking a big look at uranium. I've been doing quite a bit of research on uranium, why it's moving like it has over the last 12 months, etc. So if you want to get in on that, shoot me a DM and I'll add you to the email list. But generally, I tweet it out a few days later after I send it to clients anyway. That's what my last few days have been researching and looking at the uranium sector and why it's doing what it is. It's quite interesting. It's very interesting.
Isn't that good? Isn't that good? I think that Kansas City with the points, I can't go against Mahomes as the underdog, mate. I'm sorry. I'm saying it now. I'm saying it loud and proud. That's what I think is going to happen. I think Kelsey's going to get some stuff. I think that who's that guy? A Chetnik or whatever his name is. He's going to get lots of yards. I think that McCaffrey's probably going to score a touchdown. All of those simple things. I think it'll be a fairly high-scoring game, but in playoffs, Mahomes is 9-0 as the underdog. It's an insane stat. I can't go against him in a Super Bowl. I think that they're going to do it again. I don't think it's going to be a walkover. But yeah, I just hope it's a good game. But I just think that I'm going to take Kansas City with a couple of points that they've been given.
Fair enough. I put down my multi-bet last week. I think it was 49ers at line 1.5 into McCaffrey anytime touchdown and Pacquiao anytime touchdown, paying about $5. So I'm back in my lines. I think we're finally going to do it. We're going to get over the line. Showed a lot of resilience the last 2 weeks in the playoffs. Yeah. I think we get it done.
Okay,
so, I'm keen.
Yeah, I'm keen too, mate. It's going to be great, but it basically means I've got to get a lot of work done on Sunday to make up for anything that I miss on Monday too. So that's just the cost of doing business, unfortunately, which is fine. We work all day, we work all night. That's how it is. So on that note, thank you very much for joining us. This was what are we called again? The Theory of Thing Investment Podcast. I'm James Whelan, joined by a good mate of mine, Heath Moss. Thank you, Heath.
Thanks, James, and thank you, everyone. Have a good weekend, everyone.
Go on you. Go the Chiefs.